All right, it's June 15th. Sean Bogle for Gradual Wealth Management. I'm going to do a market review here. Uh, Start off with the S&P 500. Uh, we had a down week last week, and what's key is I actually got a pretty strong reversal bar on the weekly. This is a combination of different indicators. They've all kind of set up for some sort of bearish bar, which basically means if we get below last week's low, we may have potential continuation to the downside. That being said, if we look at the last couple bearish bars I had, obviously we're higher than those weeks. But as you can see, when we get these bearish bars, we usually, in this case, the last one was in March 14th. We had a couple, about 2 months, if not more, if not sideways action. We even had some pretty good fall through to the downside, breaking below this little flag here. The one before that was January 3rd, and we know what happened the rest of January. We had a pretty good sharp down move into the beginning of February. We also had one end of November, had a little bit of a couple weeks of down movement, and a couple here in 2013, all followed by some sort of down move. The most severe was following the end of May last year, which culminated in that the Fed tapering actually came out right after this. So what's interesting about this as well is obviously if you read in the news, you've seen what's going on in Iraq. Geopolitical risks I don't think are fully discounted in this market, so that could be the catalyst for some volatility and maybe some down movements here. Another thing that I noticed last week that I don't think is all that bullish is the best performing index last week was the social media index, which definitely is the most highly speculative index. And usually when money starts flowing into these type of indexes, while the quality type names, quality indexes like financials and stuff like that are lagging, usually kind of tells me there's a little bit of a blow off of bullishness going on, which again is usually a contraindicator. So anyway, something to keep an eye on. I'm not sitting here sell the world and run away, but there's definitely some potential for at least a couple weeks or so of some negativity. But we'll wait and see what the markets do. One issue caveat to that is I was actually, this is Sunday evening, so futures only opened down about half a point. Unfortunately, I don't have a futures account, and I was definitely wanting to sell into tomorrow. Kind of figured with some of the news headlines that's going on. It was interesting that the S&Ps were only down half a point. But needless to say, shortly after the open, maybe an hour or so, futures were down as much as 9 on the S&P. We're down about 6 right now. So Asia, I guess, is having a little bit of a reaction to the geopolitical risks. Again, I think the Ukraine may be coming into the news as well. So tensions there are getting really heated again. So anyway, on that note, we'll take a look at the NASDAQ. NASDAQ again, kind of led us in this latest up move. We actually last week wasn't as severe as it was in the S&P 500. So again, some NASDAQ stocks were holding up quite well, even though we did have on a daily, we had a market extreme, bearish market extreme. I do talk about the bullish market extreme, but we also get a bearish market extreme. We had that on Tuesday, and we followed through with a couple days of weakness, potentially going into tomorrow with some more weakness. So I also had the market extreme in the S&P 500 on the daily. So we'll see what happens, and it continued right through to Thursday. So Nasdaq will be interesting right now. You know, our support levels are. I'm looking at the Nasdaq Composite around 42.50. This level right here. So if we do get some weakness follow through from last week, I'm looking for some support in the Nasdaq 42.50. The S&P, we kind of hit we already hit the first line of support, which is around 1925 to 1930. We hit a low on Thursday of 1925 and change. So next level I would look for is a 21-day, which is right here at 1915. So that's another 10 handles. Should be another level of support. Next level of support should be this prior breakout level, which is around 1900 even. So you know, and again, not the end of the world. It's we're coming from all-time highs, but these we could see a little bit of weakness in the next couple of weeks. Something to keep an eye on, and we'll play it as it comes. So I don't want to get too bared up or what. We'll see how the market handles it this week. This will be a test. Obviously, it will probably open up significantly lower tomorrow, and that'll be the first test to see what the market does. Does the market bounce from the low and discount what's going on geopolitically? You know, that would be a really bullish, ultra bullish scenario. Or do we open lower and actually gap and go? You know, open lower and continue lower, and that would tell me that, you know what, you know, it's something we need to watch for. So right now, this is the S&P futures. So you can tell basically almost all of Friday's gains have been erased. So again, the low to keep an eye on is Thursday's low is around 19. And this is the futures. Let me take a look at the S&P just so we don't confuse one of the other. So 1925 again, is that going to be that first level of support again, which is Thursday's low? They take that out, and then I would look for 1915, and then 1900 on the S&P on the downside, and see how the market reacts in those levels. Last week, we kind of played that social media theme. It kind of worked out not too shabby for us. Twitter was one we were long all week. Still long a small smidge of this. Probably open lower with the market. Short-term support looking around 35.90, which is Friday's low. See if they can hold that. Again, if we had the ultra bullish scenario, it'd be we open up lower and then they punch them higher. The whole market in general, and Twitter might be, you know, since it was a pocket of strength last week, may continue that strength this week, especially as we hold above these 35 in here. So Twitter was you know, one of our bigger positions last week. You know, Facebook along the same line, not doing too bad. It's right now at this support level around that 64, 65 area. So we'll see how that holds. Ideally, you want to see it kind of, you know, bounce back up above Friday's high and make another leg higher. But it's not going to happen if the market decides to go lower. They'll come for all stocks, even the strong ones, on these down cycles. So again, we'll see how things work out there. Other than that, I'm not really seeing too much going into the week. Again, usually when I go into a week and how many setups I get and whatnot kind of tells me, you know, the strength of the market. So I'm not really seeing too much. So that tells me here's a good potential for some weakness coming up here this week. So, you know, I may sell some spiders, S&P 500, sell them short if we take out this low just to hedge my long-term portfolio. You know, just for a little bit. You know, if we do get a couple weeks lower, it's nice to have a little bit of something to hang your hat on, to say, all right, I'm hedged in some respect. I'm beta hedging basically. So we'll see how that works out. So that's all I have really this week. Obviously, bonds will probably get a lift with this geopolitical stuff if this definitely catches hold. So I'd look for bond strength. You know, it looks like if they break out this trend line here, this is the 10-year Treasury. If it gets above 124.20-ish, could make another move to new highs. So That's all I got, and I'll put some updates if I see some changes this week. Other than that, have a great week.